Hello, my name is Scott, and I created this video in order to share a great online calculator I use. It's ideal for someone like me who is building a portfolio of real estate investment properties. In this video, I'm going to tell you how I've used IQ Wealth Calculator's Real Estate Investment Calculator to help me make more educated and better decisions when I purchase my rental property. I'm just a normal guy, probably much like yourself, and I've used this calculator to help me make better buying decisions multiple times. Primarily, this calculator helps me not to chase properties that I want to buy, but that I shouldn't buy. It helps me stay disciplined. If you're like me, you've probably had dozens of properties that you wanted to buy because you somehow became attached to them, but you knew that it wouldn't be a good idea, but didn't have the numbers to, back it up. And so your emotions took over, right? That's where this calculator comes in to save the day. The beauty of this real estate calculator is that it can be used multiple ways to test the viability and feasibility of an investment property. Now, before we get started, there's certain things that you'll need to understand in order to use it. Getting started, the data entry fields center around four key areas. First, the acquisition information. Here is where you'll enter info related to the purchase price, the value of the property, land value, and the mortgage. You'll notice there's an option to enter info related to a second mortgage. I usually just leave that blank, unless there is a need to finance with two separate mortgages. You may also be wondering why you need to enter the value of the land for your property. Here's a reason. This calculator automatically calculates depreciation expenses from the property, and according to the IRS, this must exclude the value of any land. Land, of course, cannot be depreciated, and that's why this field requests this information. Now, next you'll need to enter your projected income and rent. If you have any questions about any of the fields, just hover over the tooltip, and it will give you more information. After that, enter what you believe your annual expenses may be. Again, you can use the tooltips if you need to understand the meaning of individual fields. Last, you'll need to enter information related to the disposition of your property. This is, of course, a very hypothetical projection since you and I never know what the future will hold, but this will be important when calculating your internal rate of return on the property and the net present value of future cash flows. And believe it or not, taxes at the sale of a property affect the feasibility of the investment. Again, we realize, of course, that this is very hypothetical. And that is why there is this hypothetical sell year field. And here's a little tip about that field and how to use it. When you enter a year other than 30, watch what happens. You notice how the last column in the table will update to show the year you've chosen in this field. Also, notice how the NPV of future cash flows updates to reflect that year. I love this because what if I want to know my numbers in the year, say, 12? You see, it isn't shown by default on this table/chart, but I can see it by using this field. Last, you may be wondering what the discount rate field is for. I'm glad this field is here because this is where I enter the rate of return that I require on the property. In other words, my required rate of return. And this isn't just the rate of return I require in year one. This is the rate of return that I need to project over 30 years, or whatever year I enter in the hypothetical sell year field. Your discount rate affects your net present value of future cash flows. This determines the rate at which your net cash flows will be discounted back to the present value, hence the name, net present value of future cash flows. If you enter a discount rate of 10% and your NPV of future cash flows is positive, that means that the investment projections you entered will get at least the rate of return you entered for the discount rate. The opposite is, of course, true if your net present value, or NPV for short, is negative. Now that we have all of our fields entered, we can begin to interpret the data. The first thing I like to look at is my year one cash on cash return and my year one equity buildup. If the total of those isn't at least over 10%, I don't even look at anything else. For definitions on what these numbers mean, by the way, hover over the numbers and a definition will be provided. And quite honestly, I like to see the sum of these numbers even about 20% for me to move forward with an investment. Next, if I'm comparing two different properties, I like to use the NPV of future cash flows to determine which one gives me a higher net present value. Comparing net present value allows you to compare two properties on a level playing field. But you should understand, I can also use the IRR numbers at the bottom of the table to evaluate comparable properties as well. This number can serve the same purpose as net present value. I would call NPV and IRR very close relatives. Regardless, this is one of the other items I pay close attention to in addition to the cash flow of my property. Besides that, let me show you how I use this using a real-world example. So let's say that in this scenario, I have a property that I'm thinking of purchasing for $100,000 and financing 75% of the purchase price or taking a mortgage of $75,000. As for the fields related to income, expenses, and the sale of the property, I have already entered what I project my income and expenses to be, as well as my sale projections. Let me start by saying that the table below gives you so much information. I could spend another 10 minutes just talking about the information on that table. All of the essential information is right there. But I don't necessarily want to get into the weeds in this video. Back to the main thing. When I look at my year one cash-on-cash return plus my year one equity buildup, it only equals about 17%, and for this particular property, I want/needed to equal 20%. I know that the only way I can get this year one rate of return to be 20% is to either get more rent or cut my expenses, and I'm not sure that will be possible with this property. So I guess I will need to cut my purchase price, and thus reduce my down payment if I want to get the rate of return that I want. Let's see what happens if I change my purchase price to $90,000 and change my mortgage amount to 80% of the purchase price. Yeah, did you notice that? One of the things I love is how this calculator automatically updates my numbers the second I type them in. It saves me so much time. Now, notice what that did to my year one rates of return. You can see I'm now above my 20% threshold. Of course, lowering your purchase price can potentially lower your property taxes and homeowner's insurance as well. But it's up to you if you want to change those. I usually don't, just so I remain conservative. You can use the same technique to test the rate of return if expenses are higher than you expect, or perhaps to test if rents come in potentially lower than you expect. This is what some people call a sensitivity analysis. It's when you isolate one or more variables and determine how your rate of return is affected when that variable is higher or lower than what you expect. So, there you have it. That's how I use the IQ Wealth Calculator's Real Estate Investment Calculator to determine the feasibility of a real estate investment. It helps me remain disciplined by applying rules I've learned and developed and just sticking to them. Don't get me wrong, there are a lot of qualitative factors in addition to the quantitative factors to pay attention to when investing in real estate, but this calculator can help you tackle the quantitative problems. If you're new to the business of investing in real estate and don't understand how to use the numbers in this calculator, then be sure to rely on the information tooltips. You can also hover over any of the big result numbers below the input fields, and a tooltip will come up from them as well. And lastly, not all, but some of the table rows include definitions in a tooltip. And always be sure to read the terms and conditions and privacy policy closely before using any website. To all of those watching out there, I hope you found this video useful and happy real estate investing.